Welcome to this week's live ASX strategy session. Thanks for joining me. Great having you with me for today's show. Plenty of things to talk about. Movement in the stock markets, movement in the commodity markets with a lot going on in gold. So lots of things to talk about there. Also, any stock codes that you want me to have a look at, pull up the charts, get a technical read on those, get them ready. We'll go through those at the end of the show. Now, as always, everything today, general commentary only, doesn't take your personal situation into account. Having been through that, let's get into our first chart for the week. And as always, starting off with the ASX 200. And it's been a good week. Been a good week for the ASX 200. And investor confidence is starting to return after last month's panic sell-off. But how much more upside is left in this rally? Is this rally about to stall? So I'll show you an indicator that I think helps answer that in a moment. And there's also an important development in the S&P 500 to discuss. And this development tends to shape the market over the future months. So something really interesting to look at. We'll talk a little bit more about that later. But before we get to that, let's start with this price action in the ASX 200. So after the briefest of pauses when prices got back above the moving averages a couple of weeks back, there's been ongoing buying over the last say 5 to 10 days. The ASX 200, it's now back to where it was in mid-February. And it's only about 3% from where it currently is now. It's only about 3% to the all-time high. So just think, this was unimaginable to many people a few weeks ago when the market was really, really plummeting or pretty much crashing. And all the doom, all the dire predictions on the internet. I think one of the standout lessons from this period, it's not to have rigid views about what's going to happen next. And there were plenty of rigid views as markets were coming back, even as markets started to rebound. People were saying, no, this is not dead cat bounce. It's going to crash. It's going to crash again. The fact is, none of us know. None of us know what's going to happen next. That's why I talk about being guided by the price action and having an open mind. And the thing with the stock market is that the unthinkable has a habit of happening more often than people expect. And I think for many people, what we've been seeing in recent weeks is probably the unthinkable from where we were not that long ago. So where does this leave us now? So prices are back above the moving averages. I've got the 50-day in red and the 100-day moving average in blue. So prices are back above those moving averages. And I think this is an important development. What it does, it diffuses the vulnerability that is present when prices are below declining moving averages. And you can see the vulnerability, how it played out last month. With prices now back above those moving averages and the moving averages starting to turn higher, it diffuses that that vulnerability that was present. One of the things you often hear me say is the bad stuff tends to happen below the moving averages, and where things are now, back above the moving averages, I think this sets up the potential for higher levels. As I just noted, those moving averages, they're starting to turn higher, and that comes after being in negative territory for about 2 months. So when moving averages are negative, it's when the faster moving average, in this case the 50, crosses below the slower moving average, which is 100. So that puts the moving averages into a negative position. They haven't crossed back to the top side yet. They're turning higher, but they haven't crossed just yet. The 50 is still below the 100. But that could change over the next week or two if prices are able to maintain their current levels or even push a bit higher. So then that raises a question. With these positive developments, does that mean now is the time for aggressive buying? And I think the answer to that is no. For me, it's been a process of gradually getting back into the money, getting back into the market, or gradually getting money back into the market over the last 5 weeks. That's what I've been discussing in these strategy sessions. And I think that remains the approach. It's an approach of gradually adding to a portfolio as suitable opportunities appear, rather than just a one moment where it's just all back in. One of the things we should think about, I think, at the moment with where prices currently are, one of the things we should think about is the potential for a pullback. And we can be sure, one thing we can be sure about is that a pullback is coming. But of course, we just don't know precisely when that's going to be. Is it from current levels? Is it from higher levels? But we do know prices will pull back towards the moving averages at some point. Let me add an indicator which could help give us a bit of guidance as to where we may currently be. It's the indicator shows the percentage above or below the 50-day moving average. So this indicator down the bottom, at the moment, it's saying that the current price for the ASX 200 is currently 4%. It's 4% above the red 50-day moving average. Now let me just compress all this for a moment, get some more data there. And I'm going to mark that 4% level. Just run a marker across there so we can get a bit of an idea of how this has worked out in the past. So where we are, 4%. And now just cast your eye back along here and see all the times the market gets to around this 4% marker. Yes, there can be some overshoots, but often this 4% marker is a bit of a barrier where the market gets to before having some sort of a pause. And one thing I think that's important to note is that you can see it doesn't happen that often that the market gets to this region. Maybe about like where we are now at 4%, might only get there once or twice a year. You can have long stretches where it doesn't get so high. So it doesn't happen that often. And when the ASX 200 does get extended above the 50-day moving average, it's usually a good sign that the upside is limited. And like you can do this yourself and you can pause and work through this, but you'll see the times where it does get to that 4% mark, and it often can be a strong rally, but then the rally starts to lose momentum and you do get some sort of a pullback. Now, don't get me wrong with this. I'm not suggesting that a big fall is on the cards here at all. Often the pullbacks are shallow and only last a few weeks. Like you can, let me just find you an example of a relatively short pullback. So like during this rally through 2021, like look at the periods where we've got to 4% and there's been a pause, moderate sort of pullback back towards the moving averages, and that happen. That happens many times in a strong bullish phase. So I think that's something to be aware of now, that the potential for some sort of a pullback does exist. And often when the price does get stretched above the moving averages, it's a sign that the risk reward for buying, it does diminish when prices are stretched above the averages. Other things to consider are the presence of the all-time high, which is in close proximity. That's often a resistance point for markets. And also prices have quickly gone from below the moving averages to above the moving averages. And when this happens, the market has a tendency, not always, but there's definitely has a strong tendency to pause, to consolidate while the moving averages catch up. Now, we can quickly find some examples of that. Like look at this example from 2023. Market quickly rallied, got above the moving averages, then pulled back. Here's another example from 22. Quick move from a low point to a high point, pull back to the averages. And you can do this sort of thing yourself. Here's during the COVID period, from below the moving averages, got above, came back to the moving averages, consolidates, then ultimately moves higher. So don't be surprised if we do get, since we've gone from below to above, that we do get the pullback, whether it be here or a bit higher. The pullback is coming. It's just a matter of when that may be. So no, from that perspective, I don't think now is the time to aggressively start buying. It's not like the market is currently it's been trading sideways for a few weeks and we're breaking out of a range, or we're just starting to rally off moving averages like these periods from last year. See, pull back, we're rallying off moving averages, we're breaking through resistance. That's not the case at the moment. This is an extended rally, which looks like maybe it needs some sort of a pause. So rather, for me, it's a case of staying on a strong rally that's continuing, but recognizing that it's becoming stretched and not getting aggressive with buying at this point. As I've said, I think it's been a case of gradually putting money back into the market over the last several weeks, not getting excited now. I think the play here, continue doing what's been working, and that's been buying where opportunity presents. And you would have seen Motion Trader members there've been a number of signals over the last few weeks that have presented opportunities to consider. And then when you're in a stock that's working, letting profitable positions run, whether it be in an ASX 200 ETF position, we've talked about those over previous weeks, whether it be individual stocks. If something's working, my process is to let it keep working for as long as possible, see where it goes. I had a look at my portfolio this morning, just the individual stocks, and it was interesting. I'm still holding 9 stocks that are up by over 100%. And that's because I'm using those wide calculated Motion Trader trailing stops. And what that helped me do, it helped me avoid this panic selling that we had through April, and it's kept me in there for the recovery. So absolutely, I had some losses through this period. I also sold some really profitable trades, which came back and actually hit their stop or hit their trailing stops, locking in a profit, but nonetheless losing them from the portfolio. But there's also another big batch where the wide trailing stop, it did see off this period, and I'm still in there. Like, the losing trades almost unavoidable if you're going to be in the stock market over time. Well, they are unavoidable, but it's keeping the losses small, staying in the good ones for as long as possible, having those calculated processes to help you stay in them and work out when to sell them. I think when things get difficult and emotional, that's when that structured plan can really help. And if you're not a Motion Trader member, maybe take the free 2-week trial and see the sort of work that I'm doing for yourself. There's a link below if you're interested. Think about whether you want to do that. Now, I think the next pullback in the ASX 200 will be important. I think it could tell us a lot. What I want to see is the ASX 200 holding on to most of these recent gains, the gains from the April low. The more it can hold on to, I think the stronger the underlying buying interest on the dips, and that's ultimately what we want to see. We want to see the dip being well supported, got this support around 8,100, got the moving averages just below there. Any pullback, I'd want to see those level holding to really indicate that there's strong interest in buying the dip, and that helps us gauge where things go in the weeks and months ahead. Now, if you're getting some value from this, please hit that like button and leave a short comment. Just, hey, thanks for the video. Tell me how your portfolio is going. Anything you'd like to add, just do all that. It really helps because YouTube sees you're engaging. YouTube shows other people, and that helps me heaps. So please do those things. All right. Well, let's move over. Let's move over to the US. Let's check out the S&P 500, and this has been one of the biggest comebacks in market history. So after being down 18% for the year just 5 weeks ago, the S&P 500, as of this week, is now up for the year. So you can see this circle I've got over here. This is where the year started, 18% decline, and now we're in positive territory for the year. It really is quite remarkable. we're not in positive territory by much. It's less than 1%, but nonetheless, we've just witnessed one of the great turnarounds. The latest rally in the S&P 500 takes the market above two key technical levels. Now, the first one being this blue line, which is the 100-day moving average, and the second, I'll just quickly add that in, it's a 200-day moving average. We've talked about this over the last couple of weeks. So, prices are now above both the 200-day and the 100-day moving averages. As I was showing you last week, prices often pause below these key moving averages after V-shaped recoveries, and this is very much a V-shaped recovery. I'll just quickly show you what I mean if you don't remember from previous weeks. Just coming back to the, I just find a quick V-shaped recovery, and the quickest go-to is COVID. There's the crash. Here's a rally back to the 100-day. Market paused and then got through the 100-day, got through the 200-day, and then we had a rally established above the moving averages from there. So that's we often see that. Again, nothing happens all the time, but we often get that sort of price action after the V recoveries. And again, the 100 and the 200, it marked a brief pause this time around as well. You can see prices pause below the 100-day moving average and just below the 200 for about a week and a half maybe before rallying and pushing on. I thought maybe the pause could have been a bit longer, maybe another week or so of consolidation, but instead what we've got is another strong advance. I think the persistence of the rally is telling us that this is a market that investors want to get back into. The dips have been shallow and the dips have been short. You just look at all these where the market has tried to pull back, the dips have been short and shallow. So that to me is a sign of buying intent. Anyone waiting for a bigger dip to get in, like anyone like looking at this latest rally over the last, say, 3 weeks and saying, look, I'll get in on the next dip, they've kind of been left behind because the market really hasn't given those opportunities to get back in. And we're also seeing prices getting through this resistance. You can see this blue shaded area around 5,850. So this takes in a high from October last year. It's got several low points from last year into early this year. So it's a meaningful level, not a massive level, but a meaningful level nonetheless. Prices are just starting to push above there now. Like I was saying with the ASX 200, I think a pullback is due in the near term. Prices are stretched above the 50-day moving average, had a big run off the lows, and the run off the low has also been uninterrupted. So a pause while these moving averages cross and catch up would be typical price action that we often see in these situations. But I think with this resistance level around 5,850 breaking, starting to break over the last few days, maybe a pullback could start from higher levels. Maybe there's a bit of a run. Now prices are getting through that resistance, and that delays the potential for a pullback. I think the play here is to approach the market from the long side and be looking for opportunities that stand out. Yes, I do think a pullback is due, whether it be now or a bit higher. I think it is due. But I'll be using those wide trailing stops to try and see off any weakness. See prices come back to the moving averages. But I think those wide trailing stops give that potential to see it off. Looking beyond the next week or two and beyond the prospect of a pullback, there's been a development with an important indicator, and I want to show you that now. Now, the indicator is called the advanced decline line. So let me just find it here. So you'll see it in this lower section of the chart. It's called the advanced decline line. What it does, it shows the net movement between the number of stocks rising and the number of stocks falling. So you add them all up, add up the add up the number of stocks rising, add up the number of stocks falling, and deduct losses from winners, and you get the advanced decline line. But what we have here, it's for the last about the last 5 months. Let me just draw this in here. For about the last 5 months, you see the advanced decline has been moving sideways, and we get that from time to time. We get that. Often when markets aren't trending, you get periods where the advanced decline might be pulling back, or it might be going sideways. And we've had one of those periods where it's been going sideways. And what we have now is that just in the last couple of weeks, it started to break out from that range and is hitting new highs. So there's an increasing number of stocks which are rising. And historically, this has been a bullish sign. When the advanced decline line breaks to a new high after several months of being below an earlier peak, so we had a peak in February. We've had had a couple of months below there, and even longer within a range. When you get prices when you get the advanced decline then hitting a new high, it often leads to higher prices in the months ahead. So it's not a signal for next week or the next couple of weeks or anything like that. It's more of a medium term sort of indicator that it's a positive sign to the underlying tone or health of the market, and that can lead to higher levels in the months ahead. As we've been discussing in recent weeks, I'm long the S&P 500 via an ASX listed ETF. I'm happy to let that position run, see where it goes. My entry points were it was as prices were rallying off this attempted retest, and then they bounced. So I had an entry point back here on the it was around the 22nd, the 23rd of April, and then there was another one when prices starting to get through this resistance around 5,500. So I just want to let that position run now. I'm not in there aggressively adding. Just let's see where this goes from here. So I'll hold off any adding for now. Reassess when we get the next pullback. See what that next pullback looks like. Okay, so I'm going to move over to the US small caps next. Got the Aussie small caps, got the commodities, got all your stock codes to go through. But of course, that wraps up the free section. If you're not a strategy session member and you want to get a whole lot more, well, there's a link below. Click there, come on in. You'll get today's replay, and you'll be here hopefully next week for the live session. Ask me about the stocks you want to ask about. We can go through them as well. All right, so let's start with, we're in the US, so we'll start with the Russell.